My name is Nick B, and let's get into this week's futures overview. Starting Monday, we have Empire State Manufacturing Index at 8:30. Um, at 12 p.m., we have Fed Chair Powell speaks. Tuesday, core retail sales at 8:30 a.m. That's going to be a big one. Wednesday, not much happening. I mean, I see FOMC member Waller speaks, but not much. Thursday, unemployment claims. Okay, so it's going to be kind of a muted week. It's going to be kind of chill. Um, and the big event really is going to be retail sales on Tuesday. All right. With that said, let's turn to the charts as always. Let's start off real quick just to clarify what happened over the weekend has no direct impact on the market. Zero. Um, it's a regular week as always, just coming back to the price action, and let's see if we can build off of what we did last week. Is tech going to be holding up, or is there going to be more profit taking, and that profit taking is going to rotate into the value sector, which is what we had last week? I don't think so, but we'll see. Anything goes, as always, identifying this on the daily, starting with the big picture. What is the trend? The trend is pretty much bullish. We're making higher highs, higher lows, higher high, higher low, higher high. It's questionable where our next higher low is going to be, but based on the levels we have up here, let's break it down the best of my abilities. Okay, so the last higher high and higher low I've identified, which were the last highs, was at 55.86, and the last floor of the higher lows was 54.87. Okay, so as long as ES technically can hold above 5586, 5600, there should possibly be some kind of strength that can take us back up to 5708, and this is where it's going to get interesting. Let's talk about upside before the possibility of downside. A break of 5700, 5708, right away my first target is going to be 5720. 5740. 5750 is going to serve as that midline, whether we can continue in 100-point increments towards 5800. If I can see that price action is holding well above 5650 on ES, it's going to give me the green light in 20-point increments to target 5660, 5680, up to 5800. In terms of downside, this is where it's going to get a little bit rocky. The only reasonable support at the moment we have is the previous highs of 55.86. If we do start pulling back from 56.60, well, again, we'll take a look at this on the smaller time frames, but you have no floor, zero floor until 55.86. And it just so happens that it's perfectly lagging about 10-point difference. My 20-day EMA is at 55.69, 55.70. So ultimately, if we do begin pulling back, as long as we hold above the highs of 55.86, or as long as the daily candle can prove to us that we can close above 55.70, there is going to be more room for a possible bounce, and maybe we recover that move. Now, if this daily decides to close below our 20-day, which is 55.70 on the daily, we close below that, that's going to expose us to more downside down to the floor of 54.87. A nice 100 point, 90 point, 80 point, if you will, drop. But that's a nice setup there. And the shoe to kind of complete the fill to the downside is if we break 54.87, it's going to give us room down towards 54.40. I'm using my 50-day EMA on the daily as a guide, but really ideally I'd like to see it below 5500, 5490. I'd like to see us below get down towards 5330. That's as much as I see on the daily here. So let's go ahead and look at this on the 4 hour. What is going on here? Okay, so we had a really nice, again, breakout, retest, made higher highs. Maybe this is the new higher low, right? Since we wicked 5620, I think that was pretty weird. 5620 held us as support on the 4 hour, bounced off the 50-day. And again, the 4 hour showed us that price eventually closed us above the 20-day when we had that nice breakout. ES is actually holding up, I think, better than NQ. We'll take a look at it in a moment. But looking at this on the 4 hour, I have a bit of a clearer idea of what's going to happen. And Ideally, again, I'm going to place my support over at 56.20. This is odd that we had such a sharp drop, and then you're telling me they couldn't take us below 56.20. Yeah, okay. So we bounced off of it. We're holding here as support. And again, this is a game of either or. So either we're going to break 57.08 and we're going to end up heading towards 57.20, 57.40, 57.50 really is that midline target for me, or we end up breaking below 56.50, which is my 20-day on the 4 hour. And really, the shooter drop is if we break below 56.20, that's going to expose us down to the previous highs of 55.86. And the song repeats itself. We break below 55.86, close to this, very close to our 4 hour 100-day EMA. Again, that's going to expose us all the way down to the floor of really 5,500. It's really black and white. I can go a step further, break this down to the 1 hour. But again, because we've identified what we identified on the 4 hour and the daily, really there's no reason to nitpick here unless we're looking for entry. So let's take a look really quick. Let me zoom in. Oops. All right, so on the 1 hour, we're above all the MAs. All my MAs crossed over. You have it in the proper order of 20, 50, 100, 200. It's a matter of time now. What are we going to do? Are we going to flush below these MAs, or are we going to bounce off of them? Ideally, I think also a really key psychological level for us into this week, or at least for now as a support, is going to be 56.47 or 56.50. Why? Well, when we had that flush down to the downside, that very sharp 2% pullback, you could see here for like the next 8 hours or so, we've been basically going sideways, and it was really a game of either or. We were either going to breach the top of 56.50 and take off, or we were going to breach the floor of 56.30 and just spill over down to 56.20, which exposes us down to 5600. You can see that the PPI candle, we wicked off 56.20, bounced right off of it, juked a lot of shorts out, and when we broke above 56.50, gave us the green light to get that push, and it was a really, really nice squeeze back up towards the all-time highs. Now, this is normal. We took some profits, we're chilling out. This is normal. We gotta wait until this new week to see what exactly is going to happen from this point on. Again, to take on any position here, no matter the bias, no matter what we really think is going to happen on the big picture, it's tough. Where I think at an inflection point, it's a middle ground. It's a game of either or. So let's see what develops. Let's see how these supports hold up. Ideally, the safest breakout is you go long at 57.08, you target 57.20, your stop could be at 56.95 or even 56.90, and you're good. That's a setup to the upside. In terms of downside, I don't trust the breakdown of 56.50 to give you that confirmation, but if we get below 56.20, I think that might be the beginning green light for us coming down towards 5600, ultimately coming down to the floor of 55.86, which was the previous all-time high. And you could see here, we beautifully, when we broke out, we retested it, made new highs, retested it again twice, came back up, made new highs, retested it a third time, and took off. So 3 times we could not knock below that level. Let's see how the floor of 5600, 5620 holds us. And that's it for ES. I can go as far as breaking it down to the 15-minute. I could break it down to really the 5-minute, maybe better. But again, it still doesn't give me a general idea of what I can expect in terms of direction. The only thing I can think of here to do from 57.20 to, excuse me, 56.20 to 57.08 is maybe I can fib it. But again, it doesn't change the big picture odds that no matter what I decide to do here right now will be 50-50 odds. So I took the fib starting from the left side to the right side. We we mapped it at the lowest point of the wick from last week to the highest point, and we have our beautiful levels. Oh, how ironic. We're right in between them. 38.2, 50, 61.8. So 56.64 on the 5-minute, which is our 50% retracement. If we break below that, we could potentially continue spilling over down towards 61.8, which is 56.54. And then below 56.54, it exposes us down towards 56.39. Not very attractive. Now, if we break back above 56.75, the assumption is we can and will have the strength to come up to 56.87. Again, this is no man's land right now. The only real confirmations, especially when you're identifying higher highs and higher lows on the big picture, is you get a break of the higher high or you get a break of the higher low. Everything in between is baloney. Everything in between is going to be a game of timing. Simple. With that said, that's all I'm looking for on ES. Before I go on for myself, I'm going to set an alert at 5700 so that I'm ready. 5700. I wanna look for longs, typically above that level. And then my panic level, well, not panic level, but really my level to start paying attention to possibility of more downside from where we are is going to be 5650. But I'll go ahead and prop it up a few points above it just so I have time to react. We're already starting to bounce, so that's good. But that's with ES. Nothing else I can really carve out of here for now. Let's move on to my favorite, the Nasdaq. All right, same song and dance, just like with ES, just a different name. So let's pull this up on the daily. Same thing, higher highs, higher lows. Without a doubt, this is a bullish trend. Um, and we're making higher highs and higher lows. We're going higher. Here's the key points. So we made a new high at 20,983. Thank you to CPI. CPI was great last week, gave us an incentive for that rate cut to be coming to fruition. However, it got really tiring to keep buying price at all-time highs and not have a clear idea of what the target can be. Also, it's skewed with a lot of risk to reward ratios because with the Nasdaq, when we're making all-time highs and when we're looking for those round numbers, sure, a breakout, we target 250 points to the upside or 250 points to the downside on a breakout or a breakdown because that's how many points NQ likes to move during the day. But at a certain point, you have to also take into account before you can reach your target of 250 points on NQ or 250 points to the upside or downside, especially in a new area. Your best bet is to start targeting 50-point increments. What I mean by that, let's say 21,000 breaks out. Ideally, you'd imagine that the target is going to be 21,250. Absolutely, but the problem with that is you don't know if we're going to reject that 21,050, 21,100, 21,150. So after you begin targeting those 50-point increments, again, on the long term, it could skew those risk to reward ratios. So last week, what I'm trying to get at is it was totally healthy. We absolutely needed it. I would have been a little bit nervous if we ended off the week with another 2% pullback. Then, yes, statistically, I believe that would call for the possibility of an early correction. But again, I don't think we're there yet. So we have the highs identified at 2983. Right away, for us to go higher, get a break of 20,983, you can close your eyes, you can go long. First target is going to be 21,000. The big picture target is going to be 21,250. Above that, 21,500. Before we get there, I want you to keep in mind that when we do go long on the break of the highs, 21,050, 21,100, 150, 200, until we get to 250 are all going to be the main targets I'll be looking at, unless price discovery does something else between there. So that's in terms of upside. In terms of downside, similar to ES, well, NQ is a little more aggressive. Our last all-time highs were at 20,370. Trying to plot it right on there. Come on. Okay. And the higher lows from those higher highs were at 19,720. Okay, that was one floor. And when we were in between there, we were going over that it was a game of, again, either or. Either we were going to break above those highs and continue higher, or we could have broken below 19,700. Ultimately, it was for this gap fill, which technically is not a real gap fill. These are just contract rollovers. But for whatever reason, NQ came down, filled that gap. And had we ended up closing on the daily below 19,700, that would have been the first shoe to drop for us to seeing more downside, possibly down towards even 18,900. Again, too short lived. With that said, we broke out above the previous all time highs, got to the all time highs, had that scary 2% pullback, and yet again, we never ever closed below the previous all time highs. That's rather inspiring. On the daily, my 20-day EMA lines up to 20,190. Again, this is a game of either or. If we get a breakdown of 20,370, one second, let me just adjust it. 20,370, that's going to expose us down to 20,350 psychologically, but really to get to the point, I'll cover the intraday levels, but a daily close below 20,370, we're going to come down towards 20,190, 20,200 as the first target because that's my daily 20 EMA. We close below that. Wonderful. That's going to give us incentive to come down now towards the floor of 19,700. Below 19,700, again, same song and dance. We can look at 19,500 being a target because that's the 50-day on the daily. But really, I'm trying to look for specifically the higher lows that were made along the way. So below 19,700, I'm really looking at 19,000, 18,900 as this first area. That's enough for a downside because below that, okay, one more. The last level to the downside is 18,250. 18,250 breaks, we're going to have a complete entire trend reversal from the high. I don't think that's happening. I don't deem that necessarily a probability yet, until it happens, of course. So, with that said, we have our odds. It's either below 20,370, we're going lower, or above 20,983, we're going higher. Now we have to figure out what is it that we're going to time in between, and is anything here really worth it? Okay, no, it's not. It really isn't. Not yet, at least. On the 4 hour, we're wedged between the 50-day and the 20-day. That's not necessarily always a great thing. The only thing I can see from the 4 hour is this midpoint at 20,740 or 750. Get us above that. That's going to be, I think, an indefinite green light to begin targeting 20,900. Get us above 20,900. 950, 983, that breaks, we're going higher. And again, to the downside, the only thing that can kind of give me that green light to the downside is get me below 20,370. I got to break this down to the 1 hour. 4 hours not telling me anything I don't know yet. Okay. Now, similar to what we went over on ES, that 5650 level, where for 8 hours we kind of chopped, below that level, and it was a game of either or. For the Nasdaq, that level is equivalent to basically your 20,500 level, which is your 20-day EMA on the 1 hour. I mean, excuse me, your 200-day EMA on the 1 hour. So technically speaking, if we do get a break below 20,500, it may possibly open us up down towards 20,420, 400, but really I'd be eyeing again the previous highs of 20,370. Let me go ahead and place an alert here for myself. 20,000, yep, that's fine, 495. And I'm gonna go ahead and place an alert at 20,003. Let's do 390. No, let's do 380. Get close to that threshold. I don't think we get down there, but again, it doesn't matter what I think. We'll see what kind of the market does into this week. And the only upside alert here on the 1 hour that I could possibly come up with is get a break of 20,740. That seemed like the perfect resistance level for last week, where we kind of just began to slow down and we faded out of there. So I'm gonna go ahead and place my alert at 20,740. And let's break this down to the 15-minute. Can the 15-minute tell us anything new? No, not really. Same thing. We've kind of identified the main direction based on the levels we've identified on the daily and the 4 hour. Anything here, again, is a game of timing. The only thing we can identify is draw a similar Fibonacci retracement that we had on ES down on NQ. Here's an interesting though. Here's an interesting look though. ES got back up to its all-time highs, even made a new high, and is kind of chilling out in the area of its highs. NQ, we have ways to go. We kind of reached a halfway point, never really got up there. We have ways to go, and I do think, and I do want to say we do get there. Just always a question of when. So with this fib that we have mapped out here, let me just change the color so I could see it better. Our main focus, as always, 38.2, 50, and the 61.8. All right, interesting. Notice how we had a limit up right up to 38.2, came down, but this 20,500 area seems to be holding up. So what I can come up here with this fib is if and when we get a break of 20,583, it's going to give us the green light to come up towards 20,005. Excuse me, 20,660. 660 was an important level last week. We had about 100, basically a 100 point spill to the downside before price was able to continue no problem up towards 20,736. And just like we identified the midpoint for more continuation to the upside, perfectly lines up to the 61.8% retracement, even though this is on the 15-minute. Okay, cool. So my indicators and the price action that I've kind of identified here, with the naked eyes tells me, confirms to me that more of a guaranteed long is above 20,740. Get me above 20,740. I think we have a green light for 100 points towards 20,845. I don't see much resistance over this spill. This was just a nasty spill. There's not much here happened in terms of resistance or support. So it could be a straight shot up towards 20,845, 850. Get us above 20,845. That's going to take us straight up to 21,000. So the real key points for me is 20,740 ultimately, and 20,380 for me on this week. Everything here, I want you to keep in mind, this is a game of timing. You can take the chances of going long above 38.2 or 50. You can try to jump the gun on that. But mind you, if you do, you need to have a wide stop loss because at the moment, from 20,370 to 21,000, you're essentially in a 600 point range. You need to understand that. On the daily, that's the only way price is going to go higher or lower. This here is baloney. On a side note though, I think our swing is going to do wonderfully for the guys who are holding the swing. That should not be an issue. I have full confidence in that. But again, when it comes down to a little bit of kind of looking at the price action on a closer scale, I'm very adamant about executing on setups based on timing. That's the one thing I try to do my best to avoid. Beautiful bounce here. With that said, that's really all we're looking for on this week for NQ and ES. A game again of either or. The bias, if you will, I don't like biases, but if I had to say, this is going higher. This is definitely getting bought. We're going higher. I mean, the guys who are ready to short and might come out the gate on Monday shorting this to the downside. I don't know about that. I don't know about all that. Again, given last week's reaction, it makes sense why everyone wants to continue shorting this, but that also makes sense why, or not why, but where our liquidity to the upside is going to come from. Uh, Taking a look at the VIX, what happened with the VIX? Well, from last week, right, we had a nasty spike towards 1333, but ended up Friday gapping down with PPI numbers with that massive push to the upside. We try to come up for this gap fill here, couldn't quite do it. Let's see if into this week we do get a push up towards 13 again. As long as the VIX kind of remains in this mute territory, we should be heading higher. Last but not least, I wanted to take a look at the dollar. The dollar has been silently, absolutely spilling over. This looks beautiful. Wonderful. So all the dollar has to do now, break 104.04, and I think we're off. I think we're off to the races. Now, if the dollar gets back above 104.13, starts climbing and trying to make its way back to 105, that's shaky territory. Maybe that might affect the growth sector negatively, maybe short term. But again, We've been looking over this and we've been kind of calling it out. The dollar slowly making its way down perfectly. I do see we have this gap to fill here. When is that? If that's going to happen, it will. But the question is a matter of when. Always when. And just to keep in the back of our minds, if the dollar decides to act up and try to get a spike back above 105, we have to ask ourselves, are we just filling this gap to come back down, or is this the real deal? And then we might see a little bit negativity to the downside on equities. With that said, that is all she wrote. I hope you have a solid trading week ahead, and we'll see you into next week. Cheers.